My name is Tyler Braun. I'm the Director of Financial Planning with the Tranel Financial Group. Right, today we're going to talk about retirement. And even further beyond that, we're going to talk about retiring post-pandemic. Right? So we've gone through this time period with our country and the world that has been extremely scary. And most people, when I say that, you're retiring post-pandemic, they say, well, what's the difference? Right? And there's a huge difference. So if we look at life pre-pandemic, right? Inflation was extremely low, right? Think of the last 10 years prior to 2020, the CPI barely moved, right? We had very little inflation. The economy was at a point where it was, I don't want to say predictable, but very steady with its growth and the outlook that was in place, right? In addition to that, interest rates were extremely low, right? With interest rates being low, that means borrowing was easier. Home prices or homes could be acquired cheaper, cars could be acquired cheaper, credit card interest was cheaper, right? So all of that has now shifted and changed post-pandemic. Now we're in an environment where we're seeing inflation at the highest level since 1970. We're seeing interest rates rise very quickly in order to combat that inflation, which makes things more expensive, right? You're paying more interest to your credit card. You're paying more interest on a car loan, on a home loan, etc. Right? All of these things are different, and we need to be able to mold and adjust to the current economic scenarios. So when we look at retiring post-pandemic, number one, you have to be very flexible, right, at all times. You have to be willing to look at different avenues on where you can generate income and what's going to give you the best return for your situation. Right? Would you agree if I asked this question, if you were sitting across from me, and I said there's more uncertainty now than there was 5 years ago? Most people would say a resounding yes, right? There's a lot of stuff that's occurring just in the world right now. And with uncertainty comes volatility. And with volatility comes emotion. No one likes to see a roller coaster in the markets. And ultimately our decision making, right, is made off of those emotions. And we have to remove the emotion when we're talking about finances and we're talking about money and more realistically talking about your future. So when we're allocating, right, post-retirement or sitting down with someone, step one, we look at what income you need to have the life that you deserve, right? That's the first thing that we look at. We're looking at the income that you need and how are we going to generate that income, and we call it insulating it. How can we insulate this as best as possible to ultimately allow you to have that calming sense, right? I'm going to have a paycheck coming in every month. And that income might come from maybe a pension, Social Security, how to take Social Security, when and why, right? In addition to that, then looking at the investments that you hold and how can this generate the income that you need. That's step one. Step two is looking at your future goals, right? What expenses do we have in the future? What goals do you have in the future that you want to achieve, right? It's all about you. So when we look at that, ultimately, when we're planning for those goals, everybody's different, right? Pre-pandemic, you might have wanted to travel a lot. I'm sitting with clients now, they don't necessarily want to travel to different places because they're scared. And that's okay, there's no right or wrong with that. But ultimately, if you want to travel, we need to budget for that and save in that direction. If you don't, then what is your goal with your assets? Is your goal to leave it to your beneficiaries and leave a bigger legacy? We need to dedicate then that growth side that says this is the long-term growth that we can harvest gains over time, right? To allow us to have that, goal or lifestyle achieved. So for example, if you had an account that said this is our growth account, right? So we have our income bucket and we have our growth bucket. The income bucket is generating the cash flow that you need now. That would be your pension, Social Security, investment income, right? We've done previous videos talking about, dollar cost averaging or dividend aristocrats. Ultimately, we're generating an income off the income bucket. The growth bucket that we hold is income for the future or assets that are accumulating over time. If the market goes down, right? And you're generating an income off the income bucket, but you're utilizing strategies that generate income regardless of the share price, you don't have to take a pay cut. You're insulated. On the growth bucket, if that principal value or that value of the account goes down, you're not reliant on those assets for income. you can wait for them to go back up, and you're investing in good, solid companies that over time you would normally see appreciate. So ultimately, when we do see the appreciation, and this is the difference between pre-pandemic and post, right? Over the last 5 or 10 years, the market has been on a great run. And as we had gains in the market, you take the gains and shift them over to the income bucket and give yourself a raise on a monthly basis. Or you say, you know what, I really wanted to buy that RV, or I really wanted to take the family on a trip to Disney World, and it's going to cost $50,000, right? Well, we've got this big gain here. Let's take it off the table. That's your memory money, right? You're never going to be on your deathbed and say, oh my gosh, I wish I saved another $10,000. You're going to remember that time and that experience that you had with your family, and your assets were able to provide you with that. But by taking that gain off the table, you didn't have to take a pay cut. And ultimately, you use the principal appreciation to fund your retirement and allow you to do the things that you want to do. So retiring post-pandemic does have similarities to pre-pandemic. But what we need to plan for post-pandemic is just how we continue to get those raises with inflation being higher, how we continue to approach, right, your financial plan with interest rates increasing, and then ultimately making sure that your goals are still at the forefront, even with all that fear and those questions that are out there, so we can make sure that you're getting exactly what you want in the retirement that you deserve.